Ladies and gentlemen, good day and welcome to Aurum Proptech Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta, Investor Relations, EY. Thank you, and over to you, ma'am.
Thank you, Neelam. Welcome to the Aurum Proptech Limited Q1 FY23 earnings call. It gives me great pleasure to welcome the management of the company represented by Mr. Ashish Deora, founder and CEO of Aurum Ventures, Mr. Srirang Athalye, President of Aurum Ventures and Director of Aurum Proptech Limited, Mr. Omkar Shetye, Executive Director of Aurum Proptech Limited, Mr. Kunal Karan, CFO of Aurum Proptech Limited, Mr. Hiren Kumar Ladva, EVP Investment of Aurum Proptech Limited. Before we start the call, I would like to remind you that anything that has been mentioned in the call which reflects any outlook for the future or which can be construed as forward-looking statements must be viewed in conjunction that the risks we face, and this risk and uncertainties are included but not limited to what we have mentioned in the prospectus of the file with the SEBI and subsequent annual report. You can find it on our website. With that said, I now hand over the call to Mr. Ashish. Over to you, Ashish.
Thank you, Asha. I'm pleased to talk to the investor community in this 5th quarterly call under Aurum management. I'm glad to state that within a period of 13 months, Aurum has given a new purpose and management to Majesco, which of course is now Aurum Proptech. Aurum's shareholding in Aurum Proptech has evolved from acquiring promoter stake of around 14% to 50% upon successful completion of rights issue in this quarter. As a group at Aurum, we have always focused on value creation through governance for all our stakeholders, including our customers, capital allocators, society at large, and our team. We believe that we are on the same path at Aurum Proptech here as well. I would like to briefly talk about real estate and PropTech as a sector, which is going through one of its best phase into my mind. We believe that these tailwinds that the sector is facing currently will continue for multiple years to come. I have tried to articulate this earlier as well, that real estate is expected to grow to become $1 trillion economy, $1 trillion sector by 2032. And PropTech, the tech adoption within that, will have 10% market share, making it to be a $100 billion sector. At Aurum Proptech, we are amongst the first movers in this sector, and we believe that it will grow in strength quarter on quarter, year on year. I'll briefly touch upon the comparative journey of PropTech with FinTech. Few years ago, it was difficult to comprehend that finance would be experienced through technology. FinTech led behavioral change and had unprecedented growth. We believe that real estate, being a similar asset class like finance, is moving in the same direction. We see trends of PropTech as a sector emerging in a similar growth trajectory as FinTech sector. Our belief is that PropTech companies will help bring transparency, efficiency, and seamless experience to the sector, creating multiple homegrown unicorns in the near future. As far as this quarter is concerned, I would like to share our excitement with all of you, as this is a landmark quarter for us. We have grown significantly in this quarter and expect similar growth rate for next quarter. We are gearing up to achieve our targeted revenue of rupees 50 crores by 4th quarter of this year as our very first pit stop. Efficient capital allocation, working closely with our investee companies, smartly rolling out our in-house products and solutions, continuously strengthening our teams, Focusing on revenue growth, strong governance, and being customer obsessed are few mantras that has kept us busy in past and will continue to be our focus in future in order to fuel the integrated PropTech ecosystem that we are creating. I will now like to hand over to Kunal, our CFO, to talk about financial performance of the company. Thank you very much.
Thank you everyone for joining this call. Yesterday the board have approved the results for the quarter ended June 30, 2022. I will take this opportunity to take you through some of the numbers of this quarter. Our revenue from operations for the quarter has increased by 79% to rupees 1464 lakhs as compared to rupees 818 lakhs in the previous quarter. The company had no revenue from operations in the corresponding quarter of the previous year. The growth in revenue is mainly attributable to performance of all our subsidiaries performing better under the umbrella of Aurum Proptech. We are hopeful for similar growth percentage of revenue performance in Q2 also. Revenue from both our SaaS and RaaS businesses have seen growth in the current quarter as compared to the previous quarter. Our total income for the quarter has increased by 64% to INR 1572 lakhs as compared to INR 959 lakhs in the previous quarter. We had a negative EBITDA for the quarter at INR 569 lakhs as compared to negative 622 lakhs in the previous quarter. Now I will hand over the call to Mr. Onkar Shetye, Executive Director of Aurum Proptech, to elaborate more on journey of our product and services. Over to Onkar.
Thank you, Kunal. Welcome everyone, and thank you for your continued interest and commitment to Aurum Proptech. Talking about Aurum Proptech, our focus areas for PropTech are 4 business segments: invest and finance, enterprise efficiency, customer experience, and connected living that shadow the real estate value chain. We continue to build SaaS and RaaS products and businesses with a mix of inorganic and organic strategy. As a part of our inorganic strategy, we have acquired and consolidated 4 companies over the past 13 months. The product portfolio now includes real estate CRM Sell.do and broker aggregation platform Beyond Walls that target the real estate purchase value chain, and rental management platform The HouseMonk and co-living company Hello World that focuses rental real estate value chain. Sell.do continues to provide PropTech solution in the enterprise efficiency segment. We have acquired K2V2. Their ARR from K2V2, their ARR from Sell.do was 13 crores. Post acquisition, we have added a new product, Beyond Walls, and fine-tuned their business model, which has effectively raised their ARR to INR 40 crores. Beyond Walls was launched in Pune and has been able to secure a 50% market share of the primary residential transaction business. With this, we have launched Beyond Walls in Mumbai and Bangalore, and we expect the ARR to grow with these additions. The HouseMonk has kept pace with its rental management solution and is at an ARR With respect to the third question, the name has changed from Majesco Limited to Aurum Proptech. The segment remains the same. We are a technology company, and information technology and software remains to be our business. The sector that we provide this solution and service to is real estate. With respect to the call money information, I will hand it over to Mr. Kunal Karol, CFO of the company.
Look, regarding the call money, our plan definitely is to use the money that we are having in hand right now, which is more than 100 crore, and we are also have some asset in form of buildings which we inherited from Majesco. So monetization of those assets is our second priority, and then we like to go for the next tranche of the call money. So to answer you, we don't have any plan to call for the next round, at least till the end of March 23.
Okay, right. Okay, right. Thank you very much, sir, for all the answers. Thank you very much, sir. And wish you all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Can you hear me?
Yes, sir. We can hear you now.
Yeah. So there was this blockchain-based solution which we were attempting to, really solve the problem of, financing, as well as, to have these smaller units which could be in turn, leased out or rented out as form of smaller REITs. So where do we stand on that? Have we been able to crack that software or the product?
Thank you for your question, Faisalji. The blockchain-based fractional ownership platform as a technology product has been cracked and has been developed. There are 2 MVPs in which we have developed this and are rolling it out. The first MVP is rolled out as a listing platform for commercial real estate, where assets that want to be fractionalized and further tokenized are listed on the platform. And the second MVP is then their investor dashboard, where investors can actually manage the portfolio of these investments, or co-ownership is to be rolled out. There is another layer of regulation and taxation that the team is working out to close out presently, which is with respect to is this coming under the SEBI regulation? What is the taxation structure when we are looking at various forms of fractionalization? And what is the framework, or what is the guidance on the investment form that we need to take approvals under? So this is the present status of the development. I'll also hand it over to Mr. Hiren Ladwa to add further to this.
Thank you, Faisalji, for your continued interest in the company and valuable questions over the time. This particular technology is something that we feel is something that could transform investment and democratize investments into real estate sector, and we are looking eagerly to develop our capabilities in that. From a tech point of view, as Onkar has already elaborated, we are nearly there in terms of our readiness to take the product to the market. We want to be very cautious in terms of how we navigate the regulation and taxation before we launch the product into the market. That's where this product right now is.
So am I to believe that the product is ready, but we are worried about regulations and who our regulator will be itself, and whether this is allowed even?
Yeah, so actually if we see in the market, there are few ways and means in which other models have come into fractional ownership. What we want to do is, yes, not only be on the right side of the regulation, but also have a scalable model at the same time.
Right now, you might be compliant with regulation, but then the model might not be scalable. If you do a scalable, then the regulation clarity is not there. We are not saying people are not abiding by the regulation, but the clarity is not there, and that's where we want the regulatory authorities to help us and clarify in terms of how this would be dealt, both in terms of taxation as well as how we treat the financial instrument that is behind this.
So we acquired a company which was into advisory and into tier 2, tier 3 towns, and where we were looking at acquiring large stakes in these properties. How is that company doing? And out of the 15 crore revenue that we have made for the quarter, which of the 4 companies that we acquired has contributed most to it? And which of these you feel will be in the next 2 years at least will contribute most to revenue? And what do you feel could be the revenue of our company in 23 ended, without holding you to any figure or, without even asking you for something forward, but what on current run rate, do you feel that we will be able to grow sequentially also, quarter on quarter?
Yes, this is Kunal. So I will just answer your first part of the question, that which subsidiary is contributing how much. Look, right now, around
if 89. You could refer to the subsidiaries by name also, because I have generally followed the acquisitions one by one.
Yes. So I will just give the breakup. So the K2V2, which was our first acquisition, gave around 9.8 crore out of the 14.64 that we have declared now. Then Hello World, which actually has been considered only for 15 days for the quarter, because we could complete the acquisition on 15th of June. So it has given 2.34 crore out of this 14.64 crore. Then House Monk, which we acquired at the beginning of March 23, has given around 80 lakh of rupees.
What did you say the name of the company, sir?
House Monk.
House Monk. Okay.
Yeah, the Singapore entity that we acquired in March 2022.
So that's 80 lakhs.
Yeah.
But that I think we have acquired mainly for the product rather than revenue.
Yes, it's a pure SaaS-based product company.
Okay. And the fourth company, sir, which has contributed?
So balance is our internal accruals from our Craig's business, which has given around 1.2 crore rupees.
So this Hello World could be like a...
Yeah, so you can consider Hello World to be almost equivalent of more than K2V2.
But is this something seasonal which has come in, this 2.34 crores? Or,
No, it's not seasonal. Okay. It's seasonal in the sense 2.34 has come only for 15 days. Because 2.34 is from 15th of June till 30th of June, because we have acquired only we could complete that acquisition only on 15th.
Would I be right in making a conclusion that for the next quarter it will contribute almost like a 15 crore revenue itself on its own?
You can derive it.
Okay. And which of these companies is burning cash most out of the 4?
Out of the 4, I think Aurum Proptech will be burning because it has got this
them to actually deep dive and grow our market presence and customer presence much deeper, and then we'll be actually focusing on much higher growth from these investments for the next 1 or 2 quarters.
And sir, if you could give some kind of a ballpark on what the revenue figures for 23 would look like.
So as of now, we will not be able to give any committed or any numbers or any forecast on that. Having said that, we have talked about the annual run rates that we have. For example, we were, if you look at March 31, we were at around 95 crores of annual run rate from a revenue run rate point of view. Within the 3 months of the first quarter of financial year 2023, we have taken that number to almost 130 crores now. Right. So this is like-to-like comparison across different acquisitions as well as in-house products that we have. Right. So that's the growth on a quarterly basis that we can talk about. Right.
You mean to say the run rate for 23 is 130 crores for the entire year?
No, this is a revenue run rate as on June 30th multiplied by 12. So that's the revenue run rate that we are talking about of the invested companies as well as our in-house products that we have.
So basically per month the revenue you have multiplied by 12, so that is coming to around 130 crores, ballpark approximately.
Yes, yes. Having said that, just to clarify, that is not the revenue guidance because that's just the revenue run rate.
Yeah, you have just multiplied per month by 12.
Correct.
So we are assuming that no growth happens in this during the year at least.
I didn't get the last part.
So you are saying that जो run rate growth का चल रहा है in this first 3 months, the same run rate will continue of growth. Further the growth percentage may not be more. So I mean, it is still a good growth, 30% also.
Yes, yes.
Over the last year.
Yeah, the way we see that fundamentally our businesses have grown in this manner is what we are trying to call out here. We leave it to your analysis and intelligence to see how that can go over the next few quarters. But we are committed to grow in the same pace is what we are trying to call out here.
Can you just elaborate more on how this co-living space is being looked at and what is our vision for it? Because the way urbanization is moving in India, and so this could be like this space. I think, to my mind, has not been attacked enough by anybody. So to really actually break the perfect model for it.
Yeah, so that's a very fair observation, Faisalji. Actually, this is a segment which had probably taken a back seat because of the lockdown initiated, migration back to the towns. But now that offices have started opening, people have started coming back to offices and staying away from their homes. So the rental economy in itself has been growing. Within that, the younger generation, right, which is just out of the campuses till their next 6 to 7 years of work life, and a bit of student community which stays in educational hubs, right? So those are the key segments which have started coming back to their or rather going away from their homes and staying in rented living. So that gives us opportunity in 2 major segments, which is the student living segment and the young generation which is staying in the co-living segment. And predominantly this co-living segment we are seeing very active in metro cities like Bangalore, in Pune, in Mumbai, as well as NCR and other towns like other cities, metros like Hyderabad and Chennai. Now, if you see, where we have invested in a company which is very focused on staying profitable, very selective about the kind of supply that we have, very focused on getting high occupancy rates, and hence, growing at a very profitable way. Hello World, which is the company that we acquired, was generating an annual run rate of 38 crores on 31st March this year. As we speak, their monthly run rate or monthly revenue is around 4.5 crores amounting to around 56 odd crores of annual run rate. Just within a span of 3 months, they've gone there. Our strategy, to your question about how do we want to build this further, Hello World is present in 15 cities right now. We intend to be market leader in 3 or 4 of the critical cities that we want to play in, right? And that's one of the strategies, and we would achieve that by supply acquisition, by focusing on the customer experience, the co-living experience, both for the student as well as the young working population in the Gen Z segment, right? So that's on a two-pronged basis, both on the demand side as well as the supply side. We have our strategy well called out there, right? So that would help us grow there.
Thank you so much, sir.
Ashish here, and I'm glad that you have always been on calls asking us very, very pertinent questions, and your questions are getting more and in terms of interest, even more in terms of interest, and we are very happy for that. Thank you so much.
No, thanks for the kind words. But I truly believe that you are actually solving a very difficult problem, and with now what looks like the right team members, and I mean, kudos to you, for taking on something which is so difficult, and where a lot of people have attempted this, but no one has done a 360 degrees on it. Yeah. So well done, yeah.
Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Deepak Poddar from Sapphire Capital Partners. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, I just wanted to understand, you did mention that by fourth quarter we are looking at a 50 crores of revenue target. Am I correct? Is that on a quarterly basis we are kind of targeting?
So I will pass on to Kunal to detail this out. But yeah, the point that we are trying to make here is that as a first big stop, our internal target is to get to quarterly revenue run rate at 50 crores by Q4. And that is where we are gearing up all our internal products, our services, solutions, and investee companies to do that. If you see the current growth and the kind of tailwinds that we are seeing in the existing quarter as well, that is where we are aiming to take the company. That is where we are targeting to take the company as a first target, as a first pit stop. Kunal, would you please?
Look, as you understand, all that we are acquiring a few companies, and those companies will come into this consolidation umbrella over a period of time. Like I said, this Hello World, we could just consolidate only for 15 days this quarter. Then definitely it will come for the full quarter going ahead. And similarly, if we can close another one in between the second and third, so that those companies will start again contributing on a proportionate basis over the period. In that way, our target, as we said, that will be around 50 crore at the end of the fourth quarter. That is
Since it's a new product.
Look, initially, maybe it will take at least 2 quarters to pick up the revenue because both the businesses are all new as compared to our acquisitions where the businesses are happening at least for the last 3 years minimum. This business will be totally new and it will be a start of the operation.
Fair enough. And on the cost side, I think currently we are doing a revenue of I think last quarter about 14-15 crores. On that operating profit was minus 6 crores. So ideally our expenses was close to about 20-21 crores a quarter, right?
Yes.
So how that we expect to shape up going forward? How will our cost escalation will happen?
Out of this 20 or 21 crore, 10 crore is our manpower cost, which according to me will not grow because all the annual increments and everything has come up. So at least till March, we do not see much addition to the cost in terms of our existing manpower. Plus the addition of manpower also is more or less freezed or as per plan, and it will a very marginal increase over there. Then the other costs definitely will vary proportionately to the revenue to some extent because some of the costs are directly proportional to the revenue. So you can consider 50% of the cost to be constant and the balance 50% to move based on the revenue.
So out of this 20% to 20 crores cost, so 50% employee cost will largely remain constant, whereas that other cost 50% will be proportional to your revenue, right?
It is not directly proportional, but it will go up marginally as compared to as the revenue grows.
Okay. I understand. So at what revenue level do we see our P&L breaking even? I mean, either at the EBITDA level or at the PAT level.
So this is Ashish here, Deepakji. We are very conscious of growing but not losing cash for this growth. That has recently been the trend over last 2 or 3 years with new age companies, with tech companies, where growth is led by losses and not the other way around. If you see right from the very beginning, we have been very, very conservative in ensuring that the cash burn is not at all tolerated by the company. Going further, it's very difficult to say what quarter we will become EBITDA positive, but definitely I can say there is a keen eye on growing with profitability and not just growing mindlessly. We are very, very conservative about that. To another one point of yours where Kunal was talking about our organic products, I think the way I look at this is year one was about focusing more on creating the company around inorganic strategy. And we did acquire 4 or 5 fabulous companies. We took some strategic stake in these companies. This gave us a very good understanding of how the market is, what the market is. And in this year 2, we are in a way kind of focusing more and more internal. We are focusing more and more organic. We know what to build, how to build, why to build. So you will see a lot of development happening on in-house products in this next, I would say, 4 to 6 quarters. This year will be about revenue from what we have done in year 1, which is investee companies. But in the next quarters, this percentage will keep changing, where organic products, the in-house products and services, will start contributing more and more. Although we think that the inorganic products, which are through the investee companies, are also our products itself.
I got it. So, yeah, that's it from my side. Thank you very much. All the best.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Mukesh Kothari, individual investor. Please go ahead.
Yeah, hi. In the opening remarks, I heard about the total addressable market to be quite a huge figure. I just want to understand what is your serviceable obtainable market and serviceable attainable market and obtainable market. See, given that India is largely unorganized, this space, I think the figure that you refer to is quite huge, and even a 1% market share in that would be quite huge. But I think that is not totally obtainable. What do you think about that? And what is the basis of the 10% of the real estate market to be total addressable market?
Very key question here. The sector is usually unorganized, and it's always difficult to find the right data point to get the total addressable market. However, we look at the sector as pan-India, tier 1 cities. You have close to 6 cities where most of the major inventory sale, primary and secondary, happens. The total size of the real estate industry is proposed to grow to 1 trillion by 2030, as per a report published by IBEF. And this will be, and the real estate industry itself will be contributing some 13% to the entire GDP. If we look at the residential real estate market, there is a report published by Knight Frank, which talks about 250,000 units launched in the country on the supply side, and close to 240,000 units launched in sold in the country on the demand side. Majorly in Mumbai, Pune, NCR, Bangalore, Chennai, and Hyderabad. We talked about Beyond Walls, our broker aggregation tech platform, which has been launched in Pune. In Pune, 40,500 units were launched last year, and around 38,000 units were sold last year, both in primary and secondary real estate. Of which, with the broker aggregation tech that has been rolled out, Beyond Walls has been able to sell close to a 12 to 15% of the market share on its platform through the broker aggregation tech. And basis of that, now we are now launching in other cities. So yes, it is a large market, total addressable market to be looked at. So that's from the primary and secondary real estate. From a buy-sell side. The rental living industry is also a large industry. We will give you one small example of a student living community in Kota. In Kota, there are 2 lakh students that come every year for various preparations of entrance exams and tuitions, etc. And these 2 lakh students end up staying in a rental living or a co-living premise, which has a potential of crores of annual revenue just in one market. And I can imagine the size of Bangalore and other cities. And there are various reports published on that area also. In Kota, what has happened is Hello World, the co-living company that we have acquired, they have captured a 4% market share, and with only a 4% market share, they are a market leader there. And the potential to be disrupted is immensely large. So this is how we are taking one step at a time, one city at a time, one micro market at a time, and then we are expanding to other cities to make sure that other TAMs are also serviced and obtained and addressed by us.
Okay, I understand that. I mean, the numbers that you spoke of, I understand that. But see, in the whole value chain, the PropTech demand or the share of the PropTech services would be quite minuscule, right?
See, if we look at, we always try to compare.
Even if you take across the 4 segments that you're talking about, so few are, pre-sales, few are post-sales, and few are, post-sales and renting. So if I just look at 2 segments of the 4 business segments, if I segregate them into B2B and B2C, their dynamics are totally different, right? B2B would have one-time acquisition cost. B2C would have recurring acquisition cost. B2B's lifetime value will be quite high. B2C's lifetime value will be quite low. So I'm just trying to understand how did you, what is your total?
You're very right.
profitable
This
market?
is a very complex industry with multiple stakeholders across these 4 business segments. But what PropTech really does is it allows you to make sure that any real estate asset through its entire value chain, right from invest and finance, where you are for the first time seeking a wholesale investment and acquiring a property, to further going on to build that property and then monetize that property, to further going on to hand over that property, live in that property, right? You are able to service the same real estate to consumers on a integrated platform, which allows you to double dip, single dip, double dip, triple dip your business model on that same real estate, right? So when you start with the investment finance segment, you come in with a wholesale or a retail fractional ownership investment model where there's an opportunity to get around 2 to 5% of the investment size. Then further you go on to sell that real estate asset on the transaction platform. Again, you have an opportunity size of 2 to 6%. Further, you go on to service that consumer who's staying in that real estate, again giving you an opportunity to dip into that real estate asset. So that's on the asset side journey. On the consumption side journey also, you are able to take care of the customer at the first instance of consumption when you are taking care of his first usage in the form of student living. And once you have that, then you are able to, once you have given him a taste of your consumer experience, that is then further crystallized on your tech platform. Then you are able to churn that and sweat that customer for multiple products, probably for his rental living requirement, for his primary, for his first apartment sale requirement, for his secondary apartment sale purchase requirement, and so on and so forth.
Okay. Fine. I mean, see, I understand it's a very complex and disaggregated segment you are looking at. There have been attempts in the past, I mean, by other players in terms of getting into service apartments, getting into reverse mortgage, and even this co-living space. But it's very, very difficult to crack. So how do you intend to have a unifying what do we say, business model which will enable you to crack these segments?
So, see, tech actually has the capability to bank the asset and then service it to multiple churns and bank the customer and then sweat it through multiple churns. That is.
Hello. 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 Hello.
PropTech has got a 10% market share in the U.S. economy. If we do the right things and if we are able to extrapolate that here, with a 1 trillion economy, India real estate by 2030, we feel that the PropTech size will be at a 10% will be at a 10 billion. So, and there we believe that there will only be 3 or 4 established players who are running the right matrices for the business, having the right products that are servicing both the demand and supply side. So that's how we are seeing this industry as, and that is why the segmentation in these 4 segments, and that's how we are building our products and services around it.
Fine. Just a couple of suggestions. One is like in whatever presentation or press release that you're making, if you can just classify the whole real estate value chain and what parts of that real estate value chain you are trying to add flavor of tech and then offering solutions, that will be great. Because there are too many segments and the specific gaps that you're looking to fill. If you can highlight that, it will be great. Hello.
No, we will definitely bring that out as an illustration in the investor presentation. How the real estate value chain is following from investment to construction to sale on the enterprise side to purchase to utilization to resale to services around that on the consumption side. And these are 4 segments that we have factored in: invest in finance, enterprise efficiency, customer experience, and connected living. That's how we have mapped the entire real estate value chain into.
Okay, yeah. And the second suggestion is on the fractional ownership. Within the framework of the current laws, what is it that is possible, and what is it that is stopping you? Because see, cars were never built in anticipation of roads being built. So, if you are able to highlight what are the impediments, because it's a big segment to crack.
It is definitely a big segment, and as Hiren earlier mentioned, that we need to build it in a way that it is scalable. The present form of fractional ownership allows investments in the form of financial instruments of up to 1 crore, or in the form of equity in form of 25 lakhs. If we look at pure form of co-ownership, which is a real estate co-ownership, you can definitely have a lesser amount of investment size. But all these 3 models need to be really scalable and appeal to an audience, where the investment size is reaching out to a retail audience, and also that helps you increase the velocity of investments and also makes the entire model scalable. There will be only a limited pool of investors who will attract a 25 lakh investment. There will be only a limited pool of investors who will be attracted to a 1 crore investment. But when you look at a smaller ticket size, which is governed with the right regulations, then we are looking at a completely scalable model. And our tech build is from that angle. The technology and the platform is being built from that angle. Our go-to market will be with the available regulations at hand. So we might start with what is available under the AIF instrument. We also will look at the equity structures which are presently available models. And then further, once we have clarity on the regulations, we will look at smaller ticket sizes.
Okay. Do you think that rights would be a competitor for this fractional ownership kind of structure? From an investor's point of view, just limiting your addressable market?
So REIT is definitely a evolved and a mature model. REIT, however, is a controlled model presently. Time to come out with a public REIT has a gestation time of around 3 to 5 years. You have to do a private REIT first, and then you have to get a public REIT, which means that the asset size that will come onto the REIT market will have its own gestation time. Second is that the investor is not able to control the asset that he is purchasing into, because REIT is a combination of multiple real estate assets combined into one pool, right? Where you get a blended return of the yields from these multiple assets. Whereas the fractional form of ownership will make sure that you are able to control the asset that you are investing into. That's one key differentiator between both models.
Okay. Fine. One final question: Who do you think are your competitors, and how different you are from them across all these 4 segments?
I think the PropTech industry in India has evolved quite a bit in the last 2 years. We have seen investments between 2018 to 2020. There was $1.5 billion of investments that has flown in. In 2021, $750 million of investment has flown in. Some key players in the market are now announced in the private space as unicorn. No Broker, for example, is taking care of the rental industry. They have been on that space. Lift Space, who's looking at the furniture rental industries at the space. Then there are also companies like 99 Acres and Housing.com who have been in this space for a long time. But these are also classifieds. One key differentiator between all these companies and ours is that everyone has everyone has a single business model. Where, they are only looking at the listing space or a classified space or rental industry or the furniture rental space. Whereas our objective is to build an integrated suite for the enterprises and also for the consumer. And that is what increases our TAM. That is what increases our ability to dip into the TAM multiple times with multiple customers with the same asset.
Fine. Yeah, good. Got it. Thanks a lot. All the best.
Thank you so much for your question.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Devang Chokani from Devang Management Limited. Please go ahead.
Good evening. I had a question that we had acquired 2 buildings from Majesco Limited. So how well have we mobilized that?
So we have not acquired, actually these buildings were in the books of Majesco Limited, so we have just got it. So when we, the current management got it, both the buildings were vacant. One was under progress, construction was under progress, so we had just completed the construction of that building. We have got that OC and everything is there. The building is still unoccupied. The bigger building was unoccupied at the beginning of the current financial year. Sorry, the current calendar year, January. So as on date, 40% of the building is already put on rent, and maybe by the end of this fiscal year, 100% of it will be occupied.
To add to Kunal, when we acquired Majesco Limited, these buildings came in as a part of the acquisition. These buildings were, like he said, the first building was already there. It was being utilized for their own consumption of their teams, the earlier teams that were sitting out of that space, and the other building was under construction. After we acquired it, we worked out a path to monetization because Aurum Proptech Limited is clearly an asset-light model where we don't intend to keep asset-heavy structure. We don't intend to keep assets in the portfolio. And towards that model, we have gone on to lease the first building. 75% of the leasing is complete now with some marquee names in the building. There are 2 financial institutions, one a national bank and one a financial institution that has taken space, which covers up to 60-odd%. There's another balance 15% leased out to another team. We will make sure that by the next quarter we have some visibility on the balance leasing, and then the asset is up for monetization, including the old asset which is pre-leased and the new asset which is just got constructed. So that also adds to the liquidity of the company, which can be further deployed for the PropTech business and growth. I hope we've been able to answer that question.
Yes, sir. Thank you so much.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask the question. As there are no further questions, I now hand the conference over to the management for closing comments.
We thank you all for your continued interest in Aurum Proptech. We intend to build a very robust, integrated ecosystem for the real estate industry. And as a part of that, we have made sure that all the right moves have been done in the last year, and we further intend to consolidate and build on this further. We will look forward to hear from you and build this further together with you.
Thank you very much. On behalf of Aurum Proptech Limited, that concludes this conference. Thank you for joining us. You may now disconnect.